Boy, that time flies when you're having fun, doesn't it? Welcome back, guys and gals. It's about that time of day again here, folks. Time to get back to work. It's Wednesday evening. It is February 12th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me. I help traders find the best setups using a very simple 3-step strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. Tonight, my job is extremely important because in the video tonight, we're going to find the best levels of support and resistance for tomorrow, the best entry setups for tomorrow, most importantly, though, the biggest traps to avoid so we can keep growing our accounts tomorrow, and that's, of course, for Thursday's trading session. And we have a ton to cover in tonight's video. Of course, the charts are all prepped up in the background. I got some oil, S&P, Nasdaq, gold. Get a lot to talk about on the charts right now. Markets making new all-time highs. Gold stuck inside of that range. Crude oil looking like it wants to follow suit. We'll see if oil can pull itself up here right from the lows here tomorrow morning as well. And of course, we'll grab the calendar for tomorrow. Speaking of tomorrow, got a lot on the schedule for tomorrow. The next 2 days are filled with big news events. I want to make sure you know when to be trading them, when to be sitting on hands. So we'll grab that calendar, we'll go over all the charts, and we'll get us ready for tomorrow, Thursday's trading session. Before we jump in, though, and put the plan together, as always, I want to remind you, if you're here for the first time today, make sure you subscribe to this YouTube channel. That way you never miss another great video, especially our nightly newsletter. And don't forget, if you have any questions for me tonight, any questions at all about anything we talk about in the video tonight, drop those questions in the comment section below. I'll be hanging out after hours to get all the questions answered. And as always, if you tune in every evening, if you love this video newsletter, if you join me every evening on this video, hit that thumbs up button for me. It means the world to me that you spend an hour with me every evening to get ready for the following day. So hit that thumbs up button if you guys are tuning in every evening. Make sure you subscribe to the YouTube channel and drop those questions in the comment section below. In the meantime, let's get this party rolling here. Time is money. Let's kick off today's trading session, today's newsletter with the economic news calendar for tomorrow and see what we have on the schedule coming for Thursday morning. Tomorrow, of course, is Thursday, February the 13th. We get some big news tomorrow morning, as you can see. Get the CPI number tomorrow morning at 8:30 Eastern time. That's definitely something I'm watching. Anytime I hear about a CPI, PPI, anytime I see these numbers coming out, I'm always thinking about inflation, dollar, that means gold. So out of all the markets we talk about tonight, gold tomorrow morning is the big one you're watching around that CPI report at 8:30 Eastern time. Now, of course, natural gas later on in the morning, probably not going to have too big of an impact on our markets, but if you are a natty gas fan, I prefer to trade crude oil specifically, natural gas being one of the energy markets, right? I don't trade much natural gas myself, but if you are a natty gas trader, tomorrow morning is your day. It's pretty much the only day of the week to be trading natural gas. You can see, though, not much else, right? Not much else on the schedule for the rest of the session tomorrow. That means we'll continue to listen in. We've been paying close attention to OPEC the past couple days. There's been rumors about this production cut coming out of OPEC. The Russians appear to still be holding out on that production cut. Maybe tomorrow will be the day they finally announce that production cut and oil can finally get up off these 50 level, right? We also know, of course, that virus issue continues to be, obviously markets made new all-time highs today. Everybody seems to think it's under control. There's a lot of traders out there that are cautiously optimistic, though, thinking that we might just wake up one of these mornings and hear a very bad headline from Asia. So we're definitely keeping our eyes open on that. Those are two what I call known unknowns for tomorrow. We know we have that big news tomorrow at 8:30 Eastern time. So, of course, we know that news report is scheduled for tomorrow. But will we hear from OPEC? Will we hear from China tomorrow? It's difficult to tell right now. Everything looks pretty rosy out there right now when it comes to the virus, right? We haven't heard much from OPEC, so we will definitely be listening in tomorrow morning to see what we get here out of China and then, of course, right out of the OPEC nations regarding the production cut. And as always, don't forget, come out and join us and come trade this strategy with us. We're going to prep the charts up tonight, and every morning, Monday through Friday, 8 o'clock Eastern time, we'll trade the stuff together every morning in our trade room. Speaking of which, let's get these charts ready now for tomorrow. Make sure the charts all prepped up for Thursday's trading session. We get some oil, some S&P, some Nasdaq, and we'll toss in some gold to wrap up today's video newsletter. I'm going to jump in first, though, to the black gold, though, the Texas T, the crude oil futures, and let's take a look at what we have here on the oil for tomorrow. Now, of course, What do we know about oil right now? We know, first of all, right, we have a nice, strong, bullish momentum on this chart, right? Nice big bull move going higher. We know the buyers have control of this market. Anytime I have a bull market, what's my job? My job is to buy at support levels, right? So, of course, I'm finding levels of support, like my support trend line, like my reversal line at 50.83, right? We're looking for support areas to buy off of support. Now, there's another big clue on this chart, and that is the trading range. You'll notice that trading range. Now, it's not really that confirmed at this point, right? You'll notice all we have is a pair of double tops. Remember, a trading range is really confirmed when you see double tops and double bottoms. So if we could see double bottoms there, I would say absolutely it's a trading range right now. But we can clearly see, though, there is no double bottom. So in all reality, this really could be just seen as just a top, and we are right back now to retesting that high. So we'll talk a little bit more about kind of what would be what to look for to qualify this as a range. At this point, though, it's good to assume that range could be there. And we'll talk about some scenarios here and what might develop, whether it's a range, right, or a channel as we go higher. So we know we're bullish. We want to be a buyer. We're wondering if this range is going to play into us here. And of course, as we go higher here, you'll notice I've got one leg up, two legs up, three legs up. So we definitely can see we've got some resistance here overhead as we try to go higher. That resistance level at 52.20, if you look left on this, right, it is a major top, right, from middle of last week. So that is a pretty important level to be aware of as we go higher. So we know we've got a bull market. We want to be a buyer at support. We know as we go higher, we've got some levels of resistance waiting up here overhead. Let's talk about some scenarios here right now, buying and selling, because for all I know, this market could easily reverse and collapse back down to that big round number if they don't hear anything from OPEC tomorrow morning. So now that we've got that under control, how do we trade this stuff right now? Well, what if the price goes higher here? If the price goes higher, whenever we see a market go 1, 2, 3 legs, we always know there's a good potential that will run into some sort of range up here. So as we go higher here right now, it would be a good idea to keep your eyes open for a potential trading range. And of course, a range-bound market, let's just say, for example, we make a run higher here, right, and then go into that range. You'll notice that's what oil has been doing a lot lately. Oil's been loving to go higher, then chopping around sideways, going higher, chopping around sideways. So if we do see this thing run higher here, you do want to keep an eye on the trading range environment. Look for double tops, double bottoms. And if we do get that trading range, I'll look to buy right underneath that trading range using a very simple seller failure pattern. And of course, that seller failure pattern, it's a pretty easy idea. When a market goes sideways in a bull market, we simply wait for a pullback. We wait for the sellers, the counter trend sellers, to try to sell off that pullback. And when they fail, right, we're buying into their stop losses, right? It's called a failure pattern to buy underneath that trading range. That's one thing I'm watching for here tomorrow. We may also see the market really kind of make a jump up here, right? And one way to buy it on the way up is to use what I call a two-try trap pattern. This will probably be the most reliable before we get up to that measured move, right? A two-try trap. Now pay attention to how this thing looks, because you'll notice it's a shallow pullback, a higher high. That will set the table now for buyers to come in on a trap. Now keep in mind, I don't want to take that trade if we reach that 52.20 area. At that point, the juice will have already been squeezed out of that, right, out of that move, so to speak, and I got to wait for that trading range. Another thing I'm watching for here is, let's just say we hear from OPEC, and if we do hear from OPEC, it'll probably be around 7 o'clock Eastern time, right as they go into lunch in Europe. That's typically when we hear kind of official announcements from OPEC. It might be earlier, but usually it's between 7 o'clock and 7:45 Eastern time, typically. Keep in mind, right, there's always exceptions to those rules, but 7 o'clock to 7:45 Eastern time tomorrow would probably be when you would hear from OPEC. Bottom line, though, is if this thing really starts running higher here, if we see a strong move up, we see a pullback to the moving average, and it just blasts right off the moving average now going through, right? This point now, we're going right on through that high, right? The market blows right through these highs. It's clearly a very strong market. At that point now, I'm going to draw a trend line off of those highs, and then, of course, trend line off of those lows. That's going to give me a new channel now. And again, as long as I can get a real strong jump off of that moving average, I should be able to buy that pullback off the low of that hidden channel. So now we get a pretty good idea of what we're looking for here, right, as we go higher. Again, I'm anticipating if we go higher here, we may get stuck up here inside of that trading range, and we'll buy that seller failure underneath the trading range, or right, that 2-try trap on the way higher, or again, that 1, 2, 3 breakout, as I call it, into a hidden channel pullback. Those are 3 scenarios I'm watching for here tomorrow, and we may end up getting stuck in that range, so really be aware of that here as we go. Now, what if we go sideways here? If we go sideways here right now, that will definitely confirm this range. Remember, at this point now, we really don't know that range is there, right? We really don't know that range is there right now. So if they sink back down in and we start going sideways here, that's going to be a pretty good sign that this, of course, is indeed a trading range. So let's say we do. Let's say we do end up sitting inside this range right now. What do we do with a range-bound market? We buy low, we sell high, and we avoid the middle, right? So if we sit inside the range, now I want to really look for opportunities here to buy underneath that trading range. It'll probably be just below that prior low, right? Because that's where a lot of buyers are waiting. I've also got that reversal line at 50.83 as well. And of course, I mentioned earlier that support trend line down there. That will be a great area of support. So all this whole area here from 51 to 50.65 or so, that's a great support area, right? And again, if we sit in this trading range, that is definitely going to be a sign here. We'll look for that move lower. That's the most important thing. Get out underneath that range, get the moving average coming over. And what I always look for is, I always look for the sellers to come in and try to sell off that moving average, because once they do, then I know exactly where their stops are. And once we know where their stops are, we know where the pain points are, we know where the sellers now get in trouble, and we can literally buy right into those stop losses. And then oftentimes what will happen is the market will come right back to that moving average and pull back and give you an option getting in. This is a very, very common kind of combination setup when we get underneath a trading range. In fact, you can see something very similar right over here earlier, right? There's your trading range. We make a run lower. You can clearly see the bears trying to sell off the pullback, right? And once they fail, we buy it going back up into that range. So it's very, very similar on that. Again, I would look for that though. The best examples of those would come just below that low, right? Get just below that low, get that moving average coming over, right? Sellers try to sell off it, and we're buying stops, we're buying pullbacks on the way back up to retest the high of the range, and of course up to retest right that 52.20 high. So that's the idea if the market goes sideways here for a while. Now, can I sell in a range-bound market? It says buy low and sell high, right? Can I sell high? How would I sell high in a range-bound market? Well, it would require a slightly more conservative failure pattern. So for example, if we do sit, and remember, this is kind of the prerequisite for this would be, we've got to sit inside of this trading range. At that point now, if we do get that jump higher, I can sell this, but I want to wait for the buyers to try once on the pullback, try twice on the pullback, and then I can be a seller from there. It's very similar to if we were to go lower and I'm simply buying into the stops of those sellers. I can be a lot more aggressive buying into stops of sellers because the market is overall bullish right now, right? But if we go sideways here, we sit inside the range. Again, the only way I would sell this market is if we really see confirmation we sit inside that range. That would allow me now to kind of absorb a lot of the bullish momentum. Then we go up. Moving average comes over, Buyers try once, buyers try twice, and then once those buyers have kind of the theoretical rope wrapped around their neck, right? I can then sell right into those buyers' stop losses. Again, I call that it's a little more conservative version of a failure. It's called a nested failure pattern. I like to use those for my trade reversals, right? Those counter trend trades, right? So we know we want to do if the market goes up. Something else you may want to watch here too, as the market goes higher, I almost forgot, because this hasn't quite been confirmed yet as a range, it wouldn't be surprising if this thing ran higher, right, on strength. We draw that trend line across the high here, draw that trend line across the high here, right, and then get that pullback off the low, right? That is something we're watching there as well, right? So, of course, if we do get that 1, 2, 3 up, right, this may all come together there now at a nice area, right, of support, right? We might get that pullback and really get a chance to load that boat, right, on that level of support. So there's some things to consider there as we go higher. So as we go higher, we got that covered going sideways, right? Again, as we go lower, looking for failures into pullbacks and back up. How would this market reverse? Right? What would a reversal look like on this? A reversal would require a pretty strong move, right? So we want to see a strong move down. Then what I want to do is I want to see those sellers come in and hold the pullback now. Right? If they fail to hold the pullback, we're going to buy right back up into those stops, right? If they can't hold the pullback, though, if they can jump off the moving average, now it's the same basic idea. It's the 1, 2, 3 reversal now. We'll draw the channel off the lows. We'll bring it up to the highs, find that hidden channel or reverse channel or backwards channel, however you want to call it, right? And then we're trying to sell off the top of that hidden channel. The target on this one's pretty easy, too. $50 a barrel seems to be a pretty easy target for those short sellers. So again, we're keeping our eyes open tomorrow for news from OPEC. I would anticipate a range as we go higher. I've got a good plan for the market as we go higher. I'm prepared to sit on hands if we get stuck inside the middle. And if we do get that nice pullback, right, if we do the pullback off the high, looking for failures into pullback combinations. Now, speaking of failure patterns, we use a lot of failure patterns because the easiest money you'll ever make in day trading is when you're getting in and the counter trend traders are getting forced out. So failure patterns are really, really important that you learn, and we cover all those patterns inside the free trading course linked up in the upper right hand corner. So pause the video for me, especially if you're here for the first time right now. Grab that link that just popped up in the upper right hand corner. Get registered as a new client on our free trading classes that you can learn all about the strategy we use in our trade room. You can see examples of how we apply that strategy to our favorite markets, and you'll learn all my favorite setups, including these failure patterns. And keep in mind too, I'll keep all the links from tonight's video. I'll put them all in the description of this YouTube video to make it pretty easy for you if you want to get registered for our trading sessions, our free classes, right? I'll put all the links in the description of the YouTube video. All right, let's keep going here. Get the oil looking good here for tomorrow. How about some S&P? So you can see on the S&P here, right? What do we know about the S&P? We're definitely bullish. Right? Bullish momentum says we want to buy pullbacks to support levels, right? What else do we know right now? We know the market did indeed spend a lot of time inside that range, right? Yeah, there was no shortage of double tops and double bottoms there. There's no doubt about that. That is a range. What does a range tell me to do, guys? Ranges tell us to buy low and sell high. Right, so you can see we're right up around the high of that trading range right now. Probably not a great place to be buying this market right now. What else do we know right now? We can also see this really nice looking spike in channel. You'll notice here there's a big spike up, right? Big spike up, pulls back, and it looks like now we're kind of sitting on that spike in channel right now. That might not be a very bad place to look for a buy here if we can get that pullback. So as you can see, there's a little more wrinkles on, to look at here on the S&P. There's a little more factors to consider on this chart. Oil was pretty straightforward. The S&P is a little bit more advanced here. It's not so much advanced, just you got to make sure you understand there's a few more layers, right, to this market. As the market goes higher here, we do have to be concerned about overhead resistance. We are at all-time highs highs. So it's a little bit of a gamble to be buying high at all-time highs, even though I realize these markets continue to be very FOMO based right here this week. We do want to be careful though as we try to go higher. So I've got my buy zones, I've got my sell zones. I know I'm bullish, right? So I'm finding levels of support, right? I got my channel low, that will be a level of support. I've got my trading range, that will be a level of support. I've got one of my secret weapons, right? An expanding triangle, that will be a level of support. And boy, right away here now, you can really quickly see here some of the big challenges we have right now. For example, right? What if we pull back to the low of the channel? What if we pull back to the low of the triangle, right? Those are going to be two very different types of markets at that point, right? It'll still be a very bull market when I pull back to the low of this channel. But if we get a deep, deep pullback all the way down to that low, that's going to feel really bearish, isn't it? And because of that, we got to make sure we're ready with the right set of patterns for it. So let's do the up, the down, and the sideways here, right? If we go up here right now, if we keep going higher, we got to be careful up around that measured move. Now, I talked about 3 legs earlier. These are pretty big legs right now on the S&P, right? Those are big legs right there, right? So we know those big legs oftentimes, again, don't be surprised if with this very bullish kind of perma-FOMO market right now, don't be surprised if we get stuck up here in some sort of trading range environment. And if that's the case, just simply wait for that market to pull back, right, below the range, get those sellers to get caught, right, selling off the pullback, and just buy right into those stop losses. That's one thing I'm watching for right as we go. Or, maybe we hear from China and China says, we've cured the virus, right? Everything's great. And the market rips higher here, right? What are some great options here as we go higher? The same basic patterns apply, right? So one strong move up, shallow pullback, higher high for what I call a 2-try trap. That would be a very reliable setup as we try to go higher here, right? Or a very simple 1, 2, 3 breakout. I would want to see them hold that pullback and jump off the moving average. Then I can draw that channel. I can find that hidden channel off the lows, right? Kind of that negative channel, that reverse channel, right? That kind of backwards channel, whatever you want to call it, right? I call them hidden channels, and we can buy off the low of that hidden channel. Remember though, you got to get some strength going higher, right? If we just run up to the measured move and sit here, look for that trading range and buy underneath that trading range. Now, what if we go sideways here right now? If we go sideways here, if we don't go higher, right? It may just sit here and go sideways here. If we sit here for a while, if we see double tops and double bottoms, well, boy, now that trend line down here really looks enticing because now I can get underneath that trading range, use that, again, seller failure pattern, right, off a level of support now, below the range, off that low of that channel. That looks great, right? Nice seller failure into a bullish rally back up to retest the high. So if we do go sideways here, we know the right plan of attack for tomorrow. What if we bail on this, right? What if we dump? What if we pull back here? Well, there's a couple different things you want to think about on the pullback right now. First one would be a shallow pullback off the low of that channel. The second one would be we go back into the range and we get stuck. That's a plan we would make sure we're ready for tomorrow. Or the other one would be we collapse all the way down. That's going to be the tricky one because it's going to feel very, very bearish when it does that. So let's talk about that. First of all, I like the idea of buying off the low of this channel. But if we get that pullback, though, what's going to happen is this trading range will try to drag this market back down. And in fact, a lot of bears will probably come in and try to sell right back into that range. So what I'm going to do is I'm going to see if we get that move lower here. I'm going to wait for those bears to try to sell off that pullback. Once I see them getting short, then I can buy into their stops for a failure pattern, buy the pullback pattern, right, for a retest of that high. Another combination setup, right? A failure, again, a seller failure into a bullish pullback. Where's my target? Target's right back up to retest the high, and I would definitely leave a runner up to that measured move. That's a shallow pullback, right? Now, if we get us back into the range now, right, if we pull back and we really get sucked back into that trading range now we're kind kind of even again, right? Now we're back into the range. If we sit inside the range, what are the options for trading a range? It's still going to be overall bullish, even though it will have pulled back into that trading range. It is a bullish bias into the range here. So what are some options for me right now? One option would be to buy underneath the range using a simple seller failure, right, into bullish pullback combination. One of my favorite ways to trade below a trading range. And again, we talk a lot about those patterns in our free trading classes, which I mentioned earlier are linked up in the description of this video, right? So we got that failure pattern is ready to go. Could I also, if we sink back into this range, could I start looking for a short? I could, as long as, again, then the prerequisite here is it's got to be sticking back inside that range, right? So if it sticks inside the range, now we know go up. Now remember, we're going against momentum now, so you want to let the buyers try once, buyers try twice. Yeah, it's a little bit more conservative, but you need that because you don't want to go against the trend really aggressively, right? And what I always tell my clients is when I'm going against the trend, I look for more conservative entry patterns, and I always cut my position size down, right? So if you're on 2 contracts, go to 1 contract. If you're on 4 contracts, go to 2 contracts, right? You want to get big. You want to load the boat. You want to go full size position on your best setups. And then, of course, the setups that are, you want to participate with, but might not be with the trend or might not be the best setups to take, right? Because of whatever reason, go half size, right? Go quarter size, right? So if you want to keep participating without the best setups, just make sure you cut your risk down there, take a smaller percentage of your account to do it. So a nested failure, right? We call those nested failure patterns. Buyers try once, buyers try twice, then we know where stops are, and we're simply selling right back up, right? Or right back down into that trading range. So that's the plan if we sink inside and stick inside that range. Now, what if we end up all the way back down here now below that range? I like the idea of buying off that trend line, but I'll tell you, if this thing runs and goes back down to that range now, below the range, it's going to feel what? It's going to feel really bearish. It's going to feel very bearish. But it won't be bearish yet. We'll be right below the range there, right? So what's the best way? Remind me again, what's the best way for me to buy below a range when I'm going against momentum? This is the key, right? We talked about this last night, right? Momentum is one of those key rules to choosing the right entry pattern for your trade. So if I'm really bearish, do you think those sellers are going to give up without a fight? They're probably not. They're probably going to try a couple times, once, twice, right? And then I can buy it going back up from there. So I have no problem being a buyer down here. The problem though is when I get there, it's going to probably be, right? It'll probably be a lot more, it'll feel a lot more bearish than I feel comfortable with. And because of that, the sellers just probably won't give up without a fight, right? They're not going to give up without a fight. So if this thing really does tumble here, get that moving average coming over, look for those bears trying once, trying twice. And what happens a lot is after these nested failures, the market tends to really race higher. And when it races higher like this, look at that little 2-try trap pattern. That 2-try trap pattern is a really great kind of follow-up setup after we get a nested failure. Does that make sense? Okay, because when those bears, when they realize they're wrong, right, they're not going to wait around. They're going to get the heck out of that position and oftentimes races higher. When it races higher, remember, you don't want to trade inside the range, right? So look at that little 2-try trap pattern, and remember, that pattern will go up, shallow pullback, higher high, and then the key here is it will usually come just below the moving average and give a little trap, right? That's kind of what that will look like, right? If you could have zoomed in on that, right, area right there, that's what it would look like right there, right? And again, we do this together every morning in our trade room. You can see hundreds of examples of these patterns, by the way, in that free trading course, like I mentioned earlier. So now we get a pretty good idea for what if it goes up, what if it goes down, what if it goes sideways, and then if we can get down below this range, and those bears can hold it, right? If they can hold it, once we get down below that range, now I start looking for my hidden channels to sell off the high of that hidden channel. You'll notice I'm not trying to predict the reversal. trying to predict things as a day trader is, in my opinion, it's a rookie mistake, because there's so much more reliable setups once you have enough evidence of momentum, right? If you're going with momentum, everybody piles on. They're very reliable setups. When you're trying to pick tops and bottoms, in other words, right, you see that strong move down and you think, oh my goodness, this is probably going to keep going lower, right? And you try to sell this thing, right? That's you picking a top. Right? That is picking a top. I realize it's very bearish as it goes lower, but you've got to look at where you are, right? We don't trade in a vacuum, unfortunately. That's one of the most difficult parts about trading. If we're just looking for setups, we're not going to make much money. In fact, we're going to lose money and pull our hair out in the process. We have to apply the setups in the right market conditions. So if I'm underneath this trading range, right? If I'm underneath that trading range, that's just not the place to be selling that pullback. Now, it might work, right? But it might not. And that's the problem. It's not reliable enough to commit a full-size position, right? It's really a gamble setup from there. But if they can hold it and run, though, okay, now we're on to something, right? Now, if they can hold it, I can look for that strong move down, shallow pullback, trap high, right, for that two-try trap pattern, right? I can look for that deeper pullback now, right, to get that hidden channel, right? Those are the options I'm looking for now once we get the reversal, right? Once we get that reversal. Now, where would that target be? The target's pretty easy. It's right back down to retest today's low. We also, that range, if you recall, from yesterday, right? That range down there around that 33, 58, 33, 55 area, right, for those bears. So that's the plan here. We got to stay patient. We definitely don't want to get caught trying to call a top on this right now, because this market, in case you've been living under a rock, has been ripping higher here every single morning on almost no news either. That's been kind of the crazy part here. So definitely play it by ear here, or definitely play it carefully when you're trying to sell this market here for tomorrow. All right, S&P looks pretty good. How about some Nasdaq? So Nasdaq is similar to the S&P, but you'll notice it's a lot different though, isn't it? Right? There's a lot of, just like the S&P, there are quite a few layers on this Nasdaq. What do we know about the Nasdaq tonight? We know, first of all, we know we're bullish, right? There's no doubt about that. You don't need me to tell you we're bullish right now. It's pretty easy to see. This is not a bear market. It's not balanced. It's bullish, right? It is very bullish here right now. And again, on very little, news about, that's kind of one of the interesting parts about this market right now. What else do we see here right now? We also see, now what does a bull market tell me, first of all? Bull market says buy at support, right? So where can I find support levels? Well, if I draw a trend line across those highs, I can bring that trend line down across the lows. And what is that called again? It's a spike in channel. Right, we spike up, we go to a channel, and that's a pretty darn reliable area of support to look for. That hopefully we'll get something off that level for tomorrow. Now, one more thing you want to be aware of here is look at this range back here. Okay, now ranges. A long time ago, I hired a trading coach, and one of my trading coaches told me, get rid of all the indicators off your chart and just look for this one key thing. Overlapping candlesticks. One of the best lessons I ever had, this is many, many years ago, was I stripped off all the indicators and I looked for only the overlapping candlesticks. Now, normally there's a flat moving average there as well. What are overlapping candlesticks? They tell me there's a lot of volume that's been traded hands there. Right? Now, a lot of indicators try to do this, right? If you were to put a volume indicator on here, right, a lot of the volume, if you put one of those volume on price indicators, right, a lot of the volume will be piled up right there. Why? Because look, right, it took a lot of time and sat there for a while, right? So if you understand, kind of market profile theory, market auction theory, if you understand those relatively simple theories, right, the place where there's the most amount of volume is where the buyers and sellers are comfortable doing business, right? They obviously like that area for whatever reason at that 95-75 area. And if the market comes back to it, right, buyers will see this as a gift, right? Think about it, right? If you were doing business on the NASDAQ at 95.70 earlier today, and tomorrow morning it's right back to the same price again, it's like a discount, right? So it becomes a level of support as well. Trading ranges. Right? Anytime we see a range, we know it's a magnet, right? Buy low, sell high. If it pulls back to that range, that will also be an area of support to consider. And then, of course, anytime I have a trading range, I always look for those expanding triangles. This one may not let me draw it on here very, very easily. But you can see I've got that trend line drawn here, right? And that trend line would be an area of support. So, very similar to the S&P. If we pull back shallow, I've got one plan. If I pull back really deep, though, right, now I've got a different plan. Well, same idea. I want to be a buyer, right? But I don't want to buy too aggressively if we get that deep pullback, right? Okay, so we kind of have a good idea for where our support levels are. How about levels of resistance here overhead? You can see here I got that one leg up, two legs up. That goes into our measured move. You'll notice how I draw the measured move from today's low, not yesterday's low, right? It's a good habit to get out of. Just use today's information. Most of the time, you just got to use today's information, right? So one leg up, two leg up. That'll be a level of resistance. That'll be an objective for the buyers. And you'll also notice, too, is I've drawn this trend line off of these lows here, off the high here. What is that called? It's called a wedge. And wedges are really interesting chart patterns because, first of all, they tell you direction. Obviously, go direction of the wedge. They also tell you target, right? Where those two trend lines come together. That target is very close to that measured move. So a very interesting example there, right, on this wedge, lining up with that measured move. So that's a definite area of resistance overhead. What else do we know about wedges? Wedges will oftentimes, when they become very narrow, there's not a lot of space trade inside of them. Right? I can buy the low of the wedge when that wedge is relatively wide, right? When it's wide, I can trade inside of it. However, when that wedge becomes really narrow, right, like a little studio apartment, right, there's not a lot of space in there. And what's going to happen is people are going to get out of there to get some space, right? And we oftentimes see a real sharp pullback and a deep pullback because of that. So, the mindset of the traders right now, we know we're bullish, but you can see, though, we're starting to get tight quarters here inside that wedge. We're starting to get right up around that measured move. So let's put the plan together here right now. What if we go up? What if we go down? Right? What if we go sideways here? If we go higher here, there's not much I can do up here, right? I don't want to buy into this level of resistance. I know that's the wedge resistance. So what I'll do is I'll keep an eye out for a range, right? Ranges are very, very common after a big run like this, and we already know the best way to trade a range, right? We wait for the market to pull back. We wait for those counter trend sellers to commit to that breakout pullback, right? Rookie traders love those breakout pullbacks, and I love those rookies. I used to be one. I learned this trick by being on the wrong side of those breakout pullbacks, right? Breakout pullbacks are great if you're trading penny stocks or cryptos and things like that, but if you're trading real liquid markets like these futures markets, where there's actually liquidity, there's actually a small spread, right? These are real markets, right? You're not going to get very good success with breakouts and breakout pullbacks, right? Especially the ones that go against the trend. So we know that plan is pretty simple. Now, maybe we go through it. Right? If we really rip higher here right now, that could happen too, right? What could easily happen is we may see this market go up, hit that measured move, right? It may go up, hit the measured move, come back and blast, right? And so now I know where that next leg would be. This, of course, is very much a hypothetical right now, right? We don't know how far they'll go, but think about that, right? They go up, they pull back, some, more no news comes out and market runs higher. Who knows? This market's been blindly bullish this week here so far. Maybe it does rip higher, right? If it does rip higher, where's your next target? Next measured move going higher, right? Use those legs, right? Use those legs, right? They're great looking legs, aren't they, right? Use those legs as we go higher, right? We never know how far it will go, but we like to use those measured moves. Once we see that strong breakout, what are some options, right? A 1, 2, 3 breakout. Mark up the high, mark up the low, right? Find that buy off the low of the hidden channel. So imagine, right, we go up, we pull back, we go up, right? Big run higher, right? Big run higher now. Don't chase after it. Find that channel, right? Or draw the trend line high. Find that reverse channel, that negative channel, that backwards channel, right? Buy off the low there. That'd be a great setup. Or if we rip higher here, shallow pullback, higher high. Once I see that shallow pullback and a higher high, now I know buyers are stacking their orders right below that low. And you want to try to get that trap because you're going to be careful here, right? Buying too high as we go overhead, right? Great setup there as we go higher. So those will be two scenarios to watch for if we do, right, keep pushing through those highs here. And of course, would you want to keep an eye on a possible trading range environment up here. Now, What if we go sideways up here? Again, if we go sideways, you know the drill, right? So if we sit up here for a while here, if we sit up here now everything else pretty much goes by the wayside, honestly, right? So if we sit here for a while overnight, now that range becomes the king or the queen, right? The key component, right? So if we sit there and sit there and sit there overnight, that range becomes really important. What do we do with the range, right? We sit tight, we wait for the pullback, and we buy into stops of those seller, right? Of that seller failure pattern, right? What if we pull back now? We pull back now to the low of that channel. Easy pattern here now, right? Now we'll get those bears to hopefully commit off the EMA, and now we can look for that seller failure into bullish pullback for that combination and a rally going back up to retest that high, right? Back to retest the high, and of course up to that wedge resistance. But what if we really pull back here, right? What if we really pull back now? If we really pull back again, I wouldn't be surprised, because you got that range down there. That range is a magnet, right? That range is a magnet. Now, if we do make that run back down in, moving average comes over, it's going to feel what? It's going to feel very bearish, right? So you want to see them try once, try twice, then you know where their pain points are, right? Then you know that's where the pain, that's where those bears start waving the white flag. Uncle, I'm out, right? You want to buy right into that. Again, the easiest money you'll ever make is when you are patient. You wait for those counter trend kind of impulsive traders out there. You got to remember, guys and gals, you're not a rookie anymore because you're watching this newsletter, right? You have this knowledge now. But there are a lot of traders out there, like I was when I was a rookie, who believe indicators are all you need, who believe I can trade on my instincts. There are a lot of people out there. I did really well in school. I got straight A's in school, and I thought, how difficult can this be? Right? Well, I'll tell you how difficult it could be. My first 2 blown accounts were proof. Right? So there's a lot of people out there that are a little bit naive to how difficult the emotions are. There's a lot of people out there that are not prepared for those impulsive moves the markets happen. You need to be ready to avoid those impulsive decisions. That's why we go over these if-then statements. If it does this, we do that. If it does that, we do this. Does that make sense? You can't trust yourself. I had this conversation last night with somebody over dinner last night. And he was saying, what's the hardest part about trading? The hardest part is you can't trust yourself when this thing starts whipping around, because you will become a horrible decision maker. It's just the way it works, right? When you've got money on the line or risk on the line, you become a horrible decision maker. So you have to work all these different if-then statements out before the you-know-what hits the fan, right? So that's what we're trying to do here right now. And again, we'll do it together with all of our clients. That way you can do it with me by watching me execute the plan properly every morning in our trade room. So again, if we get that deep pullback, right? So after the little soapbox there, if we get that deep pullback, right, we're buying into stops. And remember, this oftentimes will rip higher. And when it rips higher, don't chase after it. Remember, those impulsive moves. You've got to be waiting for, if it rips higher here, shallow pullback, higher high, trap low, right? Got to be waiting for that trap, right? Got to be waiting for, as we rip higher here, right? As we rip higher here, trap low, right? Now you know what you're looking for, right? When you see a real strong move like that, right? So we see that deep pullback. We get that nested failure, right? Bears try once, bears try twice. We're buying into those stops, but market races higher here. Don't chase after it. Right? Think like a pro. Pros are going to wait for their edge. And the edge is, once they see that shallow pullback in that higher high, now they know exactly where they want to buy here, right? They don't let the fear of missing out trade for them. It's easy to let the fear of missing out, right? FOMO, fear of missing out. That's really, it's intoxicating, right? But you have to get over that. You have to remember, this is a numbers game. Right? And you can juice the numbers in your favor if you just wait patiently long enough to get the best setups, right? Not on instinct, right? You're literally delaying the instinct, right? The instinct kicks in, you say, nope, you're not going to trick me this time. That little voice in your head, shut up and let me wait for the right setup right now, right? And again, we'll do it together every morning in the trade room. That way you can tell that little voice in your head, take a back seat, we're going to wait for the right pattern to increase our odds of success. So that's the idea, right, as we go deep, right, into that pullback here. Now, as you can imagine, if we do get that deep pullback and those bears can hold on to this now, Well, now it's on, right? Now it's on. Now, and again, we're not trying to predict that reversal, but now it's on. Now I can mark up that low. I can mark up that high, right? And I can look for that sell off the top of that hidden channel, right? Or if we get a deep pullback down, moving average comes over, right? They hold that pullback now. A lot of times, that big move down now will give you that shallow pullback, right? That trap high. And a lot of times that will be right off the high of that hidden channel too. So we can gladly combine, right, these patterns. But again, it all kind of hinges on, we got to get the reversal first, right? We're not in the business of predicting reversals, right? Because if you get in the business of predicting, you're not going to be in business very long. Right? You got to trade what you see, not what you think, right? We all know that. Now, where's my target going lower? There's that 9,500, excuse me. The kind of the biggest of the big round numbers right now. I would imagine that 9,500 is a big psychological level. The next level overhead would be to 10,000. Right? Could you imagine 10,000 on the Nasdaq? Okay, so now we got a pretty good plan here for the Nasdaq. And again, stay patient for the best setups because remember, it's a numbers game, right? We're playing the odds. Okay, we're not trading reality here. There's no reality here. We're playing the odds. It's pattern recognition and it's the law of large numbers. It's pattern recognition and it's probabilities. That's all we're doing here as professional traders. All right, NASDAQ looks good. And again, don't forget, I go over all of these patterns, right? You'll learn the entire trading strategy as part of those free trading classes I mentioned earlier. Not to mention, I'll also send you hundreds of examples of how we apply this strategy to our favorite futures markets. Let's keep rolling here. Wrapping up tonight here over on the gold. So gold is, well, what is it right now? We know we're bearish. Right, we get that big bear move down back here. What else do we know? In a range. Okay, so what do these two tell us, right? A bear market, bear move down. Bear move down says sell at resistance, right? Sell high, sell at resistance. What does a range tell me to do? Ranges say buy low, sell high, avoid the middle, right? Buy low. The size of the range determines my buy zones. Sell high. The size of the range determines my sell zones, and avoid the middle, right? No trade zone. Stay out of the middle, right? Remember why? The middle is the magnet, right? You don't want to be trading on the magnet. You want to wait for the market to go up and then go back to the magnet, right? Go down, go back to the magnet, right? You want to trade on top of the magnet. You won't make any money that way. You want to go up and then sell it back down or down and buy it back up. And of course, anytime I have a trading range, I'm always lining up these higher highs with my expanding triangles, right? Lower lows, expanding triangles. So those areas, what are those? Those are support levels, right? And of course, resistance levels. So we got a pretty good idea of where we have some pretty good support and resistance. I'm also watching, and you can see here, as we go lower, I've got one leg, I've got two leg, right? I've got three leg. Now remember, this is not just support down here. It's a major objective for those bears. Anytime I see a mark going three legs, I always anticipate a range down there, right? So if we do get down there, there is a chance we may see the market stick, right? It may stick as it goes lower. Okay, so now we get a pretty good idea. You know where the measured move is there. Let's clean this chart up a little bit here. You'll notice I've been marking the pendulum swings here today, right? The size of that range. I take the amount above, below. That gives me more definition as far as where that support level will be here, right? That is a big clue here for tomorrow. So that's why that the pendulum swings come from. So now we know that. All right, perfect. So now we got all the levels all marked up. That looks great. Buy low, sell high, avoid the middle. Now, what if we go higher here, right? We know the market is bearish. As we go higher, what's the plan? The plan is to use the level of resistance. The plan is get up inside the sell zone here, right? And the plan, of course, is get those buyers to try to buy it into resistance, right? And sell back down into that trading range. Now, what if we race higher here, right? What if we do end up, right, running higher here, right? It could easily happen. What would the plan be? The plan would be either a 1, 2, 3 reversal, which by the way would also be a breakout too, right? 1, 2, 3 breakout, mark the high, mark the low, buy the low of that hidden channel. Now remember, these types of patterns, these oftentimes take some time to set up, but they will quickly pull right back, right? Remember, you don't want to try to predict a reversal, and don't even tell me that a strong move up is enough, because you can see right here, that's a very strong move up, and they bought and failed right back down to that range here. That's all we're doing. We're waiting for it to go up, wait for the buyers to commit, and sell it back down in. Wait for it to go up, wait for the buyers to commit, and sell right into those stop losses using that trading range as the magnet. But if we can go up, if they can hold that pullback now, and we get a nice big jump off the EMA, great. Sounds good. Now we're bullish, right? I'm not trying to predict that breakout, but once I get it, wonderful. Find my new channel, and I'm buying the low of that hidden channel. Or maybe we just get big, blast higher here. If it starts ripping higher here now, shallow pullback, higher high. Once, see my shallow pull. Actually, you know what? You probably won't even need it on this one. A lot of space overhead here, because that trend line, see that trend line back, the same trend we had last night. That trend line is probably going to be, right, an easy target for you. So if this thing really races higher here, you know, if I have a lot of space overhead, right? There's a lot of open space there. So whenever if I have, you know, let's say, for example, we had a major resistance level right there, right? I would look for that 2-try trap, because trap patterns are really the best to avoid buying high. So, you know, we're going to new all-time highs, the Nasdaq and the S&P, right? I want traps, right? We're trying to go higher on oil, right? I want a trap, right? But on gold, though, there's a lot of open space up here. So as long as I can get a strong move up, right? Get the bears to try once, get the bears to try twice. As long as that second try is a relatively big, relatively, it's not huge, but it's relatively big at that point now. Oftentimes, you can grab a little trend line there, grab a little trend, little hidden channel there, and buy off of that low. So again, if I had a concern about a level of resistance right here, which we don't, right, not right now, right, and I ripped higher, I wouldn't want to buy into that resistance. What I would do is wait for the shallow pullback and get a trap, because traps are the best. It's the same basic pattern, right? It's the same pattern. It has a trap low to it. But because we don't have any resistance there, strong move up, 1 try for the bears, 2 try for the bears, right? It's the same basic idea. It's called a 2-try breakout pattern. It's a very strong move up. You don't want to chase after it, because a lot of times what happens is the market will straight up and come right back down here again. So you don't want to do that, right? But you do want to see if you get those higher highs. If you can get those higher highs, though, right? Bears try once, bears try twice. Perfect. Then we can sell it. Then we can buy it, right, into those stops and run higher from there. And definitely keep your eyes on that trend line, right, like I marked it before, right? That trend line is a big clue as well. Now, as we go higher here, what if we don't get those higher highs? You know what happens a lot of times is the market will race higher, but then it kind of falls apart, and they try once, they try twice. Oh, nested failure, right? You probably saw that coming a mile away, didn't you? Right? So now, see the difference here? As we go higher here, strong move up, pull back, and go. That's a breakout. 1, 2, 3 breakout, right? Strong move up, shallow pullback, higher high, trap, right? Or 2-try breakout. But if we make a nice strong run higher here and the buyers kind of run out of gas, right, once, twice, right, oh, now this doesn't look so good anymore. Now we're shorting into, again, I call this a nested failure, right? So a very subtle, a relatively good pullback, it's a buyer failure back down in. But if you really shoot higher here and all of a sudden they go, oh, wait a second, wrong direction, they don't make higher highs, now they're making lower lows, trying once, trying twice. That's something to look for a sell back down in, called a nested failure pattern, and it has a lot to do with the momentum, right? That momentum will be really strong. You got to let the buyers try a few times before you go selling into those stop losses back down to retest that low. So there's some things to think about there as we go higher here. What if we go sideways? If we go sideways, nothing changes. Right? If we go sideways here, not much changes. We're still looking for that buyer failure above the highs. We're still looking for pretty much everything stays the same. What if we go lower here? Right? If we go lower. So what are the options to buy in a very bear market right now? Let's not mix words here right now. This gold, it's been, I can almost kind of see one of those paddles, right? Shock 'em, right? It's like this market right now is just dead. It's like a cinder block right now, right? It's very bearish. It's trying to get up off that low, right? It's feeling pretty bearish right now. How do I sell it? Sorry, how do I buy it underneath a bear range. It's that same nested pattern, right? So as we go higher here, we want to buy low. We've got a great area of support down here. I want to be a buyer, but we're bearish. That's the hard part, right? So how do we do this? How do we buy in a bear market? We let the bears exhaust themselves, right? We literally give them a shovel and we let them dig their own grave, literally, right? We let them dig in once, right? The aggressive sellers will come in right off the moving average. Professional sellers are waiting right above that trap, right? And they'll give it that second try. Once those bears get twice, yeah, now we know. Now we know where their stops are, right? They're probably not going to keep swinging at it, right? Now we know where stops are, and now we can buy it right back up, right into that trading range again, right? So remember, it's all about momentum. If we go lower here, yes, I do want to be a buyer, but no, I don't want to be aggressively buying because, again, we're bearish. What do? I wait for one, I wait for two, and then I know where their stops are, and I can look to buy into those stop losses. And then obviously, if we go lower here, right? And again, a strong move is not a guarantee. I mean, look back here. Those are pretty strong too, and those didn't hold either. So if we do go lower and we can hold, right? Strong move down, moving average comes over. You know the drill, right? Hold the pullback and jump. Perfect. Now we know we're breaking out. Now I can go out and find my, right? And find my hidden channel, right? And I can sell off the top of that hidden channel, that reverse channel, that backwards channel, whatever you want to call it. Right? Or as we go lower, maybe we really start tumbling lower, right? Maybe it's obvious now we've broken free of this. A strong move down, lower low. Probably not that strong, right? But strong move down, lower low, right? Shallow pullback, trap high. That will be the most reliable form of that two-try breakout. Or strong move down, buyers try once, lower low, buyers try twice. Again, ideally you want that trap right above that high because that's where all professionals are waiting for it, right? But you may not get it. Where's my target as we try to go lower? Right back down to this range down here, right? So my target is right back into this big old range. Yep, big old range back down there. That would be a nice, easy target for us as we try to go lower here for tomorrow. So again, we're buying low, we're selling high. We are avoiding the middle of this trading range. I have no problem trading breakouts, but I'm not trying to predict breakouts. I'll wait for the confirmation of the breakout, then we'll trade the pullback to the hidden channel or the two-try breakout pattern from there. And again, don't forget all those patterns. You can learn all about those patterns by grabbing that free trading course in the information icon in the upper right-hand corner, or all the links, whether it be to join me tomorrow morning in our trade room or register for our free trading classes. They're all linked up in the description of that YouTube video. All right, great job. All the charts are prepped up. We know tomorrow's schedule as well. Now, don't forget, right, the easiest way to learn this stuff is to come out and do it with me every single morning at the opening bell. We get together every morning, Monday through Friday, 8 o'clock Eastern time, and we execute the plan together. That way you don't have to go out there and do it all on your own. It's easy to lose a lot of money really quickly when you're brand new to trading, especially if you're under the assumption that you can do this on instincts or indicators alone. Don't forget our advanced classes. They'll teach the entire trading strategy, all the trading psychology, all the tools that we use every day in our trade room, and of course, a lifetime access to every morning's trading session. Don't be afraid to call the toll-free phone number there, right to the right of my ugly mug. Don't be afraid to call the toll-free phone number there. If you have any questions, I can always walk you through the process of getting registered, right? Grab the live support tool. If the phone isn't a good fit for you, you can use live support for us as well. Again, I'll put all the links to get registered in the description below this video here tonight. And as always, right, if membership isn't quite right for you right now, at the very least, make the most of our time together every evening by taking our free trading course that's included as part of our free trial. That free trial will give you a free pass to our trade room, hundreds of examples of how we use our strategy on our favorite futures markets, and of course, that free trading course to learn all the good stuff we talk about every evening on this video newsletter. That's all for me tonight, guys. As a heads up here, I will not be here tomorrow night on the newsletter. No newsletter tomorrow night. We got a holiday weekend coming up. I'm going to be out of the office right tomorrow afternoon. So no newsletter tomorrow. We got a holiday weekend coming up. I'll see you guys back here on Tuesday next week, right? Tuesday next week, because Monday is the President's Day holiday. And I hear there's a holiday something coming up. My wife was telling me something. There's some holiday coming up, the 15th of the month or something like that. I gotta go. I gotta get ready for that too, I think. So you probably know what that holiday is, right? If you know the name of the holiday, right, type it in the comment section below. I'm still wondering what that holiday is, right? I'm still wondering why everyone gets all excited about this middle of the month of February. Anyways, hit that thumbs up button if you guys tune in every evening. Make sure to subscribe to our YouTube channel. Drop those questions in the comment section below. What was the name of that holiday, right? The 15th of the month. I'm a guy. It's probably not in my DNA to know that holiday is. I'm kidding with you. Have a great rest of your evening tonight. Right, we'll see you guys every morning in the trade room. Again, no news of tomorrow night. We'll see you guys after the holiday. That's it for me. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.